Gold just sent a massive signal to the market that is saying that the investors are not completely sold that inflation is done with. So, with that, we've seen gold futures absolutely explode over the weekend, on Labor Day weekend, no less, when the markets are closed for multiple days in a row, for 3 days in a row, the long weekend, for Christ's sake. I mean, we can't even take a break at this point because we see gold futures just absolutely erupting here, and gold rises on US rate cut bets. And silver is hitting that 14-year high, just showing that investors believe that inflation is not under wraps. So it hit more than a 4-month high on Monday, which is today, as increased bets for the US Federal Reserve interest rate cut this month lifted the allure above that 40 per ounce. And the dovish comments from the Fed's daily helped traders look past a higher core PCE and kept the door open for a 25 basis cut. Now, if you guys remember, I went over this last time. So if you guys are joining with me again, make sure you're hitting that subscribe button. But the inflation numbers are not going away at all. It seems like inflation is running wild at this point, and it keeps increasing and just staying flat. It's at that 2.7%. It met expectations, but it increased from June to July to August here. So, we're going to, our June to July, we'll get the August numbers here in the next couple of weeks. But it's interesting when we see, the fact that the interest rates are going to be cut, and everybody essentially has this, feeling at this point that inflation is under wraps, everything should be okay. And the market is telling us the opposite, right? If you look at just from the surface level, the gold futures, gold usually is a sign of how investors feel about the overall inflation. So obviously, the investors feel like inflation is not done. We're not stopping at any point in time right here, right now. Inflation keeps on clicking. And because inflation keeps on humming away, well, people are flocking to gold and flocking to other assets like the S&P 500. Look, obviously the market isn't open today, so these are after hours. We're seeing it drop just so slightly, even though we hit a new all-time high back on Friday. And even when we just look at CPI, that 2.7 number, and the Fed has been talking about moving that target away from that 2% number. Now, the Fed has essentially just come to grips that, hey, you know what? We're not going to be able to battle inflation at any point now. So we might as well just move the bar. So everybody's saying, hey, you know what? Why is it important? Well, the inflation rate, everything else. But the CPI is taking away food and energy consistently, and it keeps on moving the needle. Now, if we look around the globe, other markets are feeling the pain just as much. Today, we had the UK bond market absolutely collapse, with the 30-year bond rising 5.46% in a single day, the highest since 1998. So the yields in the UK are now 15 times higher than they were at the low of 2020. So what is happening here, right? Most people don't realize just how bad the financial picture in the UK is. It's spending its time across that 60% to GDP compared to 53% in the pandemic. Now, if you guys are keeping track at home, even though the UK is in a huge, tough spot here, GDP to debt ratio in the United States currently 123%. So the UK bond market is crashing at 60%, but we've got the US GDP to debt ratio literally double that. But if you look at the revenue as percentage of GDP, it's slower, around 40. The national debt is climbing like crazy as well in the UK. And then on more of it, we're seeing the rise of financial conditions ease. U.S. financial conditions are easing since September 2024, but the yields are elevated and refuse to drop. So bond markets know exactly what is coming next for the US fiscal picture. And so they say a lot of these things, right? That, you know, it leads, the UK leads, and, we see people like, or the countries like Canada lead what is to happen in the United States. But we've had the Bank of England already cut, right? We've had banks all over, central banks around the globe cut interest rates at every turn except for the United States. So is the US going to cut interest rates now? I mean, it seems like this is just par for the course. Like what is going to happen here? But I don't think it should be a foregone conclusion that we need to cut interest rates just because of what we've seen, right? I mean, look at this. 89.6%. They say this is the probability, right? I mean, it's a projection based on the market and everything else. But I mean, everybody is flocking away from the dollar. We're seeing the global international reserves of gold increase. Gold replacing fiat currencies as a reserve currency. Gold's share of the global international reserves rose 3% to 24%, its highest in 30 years. And it marks a third consecutive annual increase. Meanwhile, the dollar share keeps on declining. So people are going away from the dollar. They're keeping the euro, which is very interesting. Keeping the euro at that 15%, but it's not quite, the level of gold. The gold levels just keep on rising up, right? They just keep getting more and more gold, stacking it, stacking and stacking it. Meanwhile, everybody's flocking away from the dollar, right? I mean, it's like what we see with you know, with what we're seeing with the reality setting in here. Everybody's realizing that the dollar is dying off, folks. So, foreign central banks now hold more gold than US treasuries. And this is the first time it's happened since 1996. So everybody and their mother is getting away from that dollar and flocking towards that pet rock we call gold. Now, why do you ask yourselves, why are they doing that, right? I mean, we've seen the dollar, the worst start we've seen since 1973. So over 50 years, the worst start of a year to the dollar. We're still at 97.66 for the Dixie. It's falling very low and it's not increasing anytime soon, right? We're seeing that crash and burn here. So the Dixie is usually an indicator of what's going on. And then, of course, we see gold futures just shoot up like crazy. I mean, my God, what the hell is going on here? Right? So these things just keep on humming. And all the signs of the debt just increasing keeps coming back. And inflation, the Bank of England cut interest rates because, hey, you know what? Inflation was under wraps. That's what they're saying here in the United States. Well, inflation is coming back in the Bank of England, or in England, in the UK. CPI inflation hit 3.8 with expectations of 4 plus. It's double what they're targeting. So it's getting even worse, right? And like I said, they cut interest rates. And then we saw, you know what? Hey, UK is cutting interest rates, and that's sending a major warning to what is happening to the potential here. So we've got to keep a close eye on what is going around globally because the United States, well, even though we're the top dog, these guys all send signals. They all have fiat currencies. They're all essentially just, showing us what the United States has to look forward to if we cut interest rates. There's really no avoiding it at this point, right? So keep a very close eye on what the Bank of England is doing. And keep a very close eye on how this continues to play out. Because I think if you ask me, the UK needs to raise interest rates if the US doesn't cut. Economic growth has become so weak in the UK that they have no other options, what this says here. GDP growth in the UK, trash. I mean, let's be honest, the UK is in a tough position here. And the only lever that the Fed has is just cutting interest rates at this point. So cutting the interest rates, was it a good plan? Doesn't seem like it. Seems like they did it a little bit early. And this trend is spreading across the world. Japan's 30-year bond yield broke above 3.2% for the first time in history. US is right behind it with the 30-year yield on track to break 5. And this explains what is coming next for the US. This is why I said this. This is why we saw gold surging. The Fed is about to cut interest rates, and it's going to raise above 3. And now gold is up 30% year to date and has tripled the S&P's 500 in this bull market. This is not something normal, folks. We don't normally see gold just absolutely kicking the S&P 500's tail. Usually it's the other way around. But investors know what is coming. So they're flocking to some hard assets, right? Gold being that one, at least in this case, right? We've seen it with other hard assets as well. So make sure you guys are hitting that subscribe button and smoking that like for me. And I see we got McLovin in the chat. I'm bringing this to you guys on Labor Day. I'm pretty sure I'm going to try to give you guys a daily update for the rest of the month of September. I'm not doing any serious travel here for at least this month. So be sure to subscribe and hit those bell notifications so you guys can start joining me with every single one of these. And I will catch you guys all at the next one.